Up thrusts on oil futures using a daily time frame. Here we have up thrust 1 and here we have up thrust 2. Now, just because they are up thrusts, we don't blindly trade them. We're going to dig deep into the price action and study it more or less bar by bar. We will unravel why we take them. Okay, we need to know the why for our trade. If we see an up thrust or a spring, like here's a spring, we dip under, we need to know why. We don't just take it because it's a spring. That's dangerous trading, and and over time it will destroy your account. And for clarification purposes, this here is not an up thrust. It is reversal action, agreed, but we don't break this high, so this is not an up thrust. In fact, it's actually testing this up thrust, but we'll discuss that at a later date. So let's dissect the chart. So here we go. We're in an uptrend here, as we can see. That ends at A. Now, what do we know to A? We gap up here. So there is a demand imbalance, and we also get a surge in volume. You can see over the previous bars. Yet, where is the follow through from this demand imbalance? Where's the follow through? Consequently, we react pretty sharp with selling of good quality on the way down to the lows, where we actually make a lower low after a demand imbalance. So we know there's selling here, which cascaded and carried on going to the downside, where we can see and is verified by the volume. So volume increases as we make lower lows. Therefore, that is selling of good quality. And then we revisit this area. So we rally here and we revisit this area. Of course, we draw this as an area of resistance. Then what happens? We gap up once again in the same area. So we drive up and then reverse to close, bang, slap bang at resistance. This action is an up thrust. Ideally, we would like a close back under resistance, but all this here, why can't buyers, if we're breaking into new ground, as we were, buyers are unable to sustain the buying. Sellers come in and close it back down. So if we draw from the gap here, we can see that although we pushed up and it is an up bar, we only close 35% off the lows. Therefore, sellers more dominant on this bar, even though it is an up bar. Okay. Because why? Well, because we're at resistance. We should be breaking into new highs. So this bar is weak. Then we react down. What do we notice? Good widespread closing week, selling of good quality. Then we rally back. What do we note again? Volume declines. There is no decent buying after a gap up, which results in an up thrust. So there is a demand imbalance that doesn't pan out, same as we had over here. So for whatever reason, sellers are protecting this area. They find it of value, and this here traps an awful lot of traders. So we rally back up, we see no demand, and then boom, we have this bar pops its head above and then reverses to close weak on its lows with a nice pop in volume. This is selling. This is supply entering the market again. And what does this do? It tests this bar over here. So selling emerged here and selling has emerged here once again. So from here we bounce around and we're in a trading range. And then we break at B. What do we note at B? Widespread bar closes on the lows with a surge in volume over the recent price action. Therefore, we can say this is a valid break. Over 50% of the spread closes under our area of support. Now this is where it gets interesting. What do we note? Well, this was support, support, support. Valid break. So that, as we know, we'd count that as a +1. So we have 4 touches or points of validation. 1, 2, 3, 4. So as we come back down and we halt here, we'd expect a rally, and this would be our rally to ice setup. So we're looking for this as we hold here. We're looking for a short in this area. And what happens? Well, all this action here we'll classify as an upthrust. So our test, our rally back to ice, is the upthrust. And what do we note in this area? Volume declines. It drops off. But importantly, as we break, it is much lower than our anchor point here. This is the supply that it has taken to break here. Then we try to break on lower volume, and as we know, Wyckoff states it takes equal or greater volume to break an area of support or resistance. So we know that this is more than likely a fake break, or an attempt to break, should I say, which fails, and we can see the low volume. So as we close here, we'll classify this action as an upthrust. We're trading back under resistance. So this action here at the upthrust 2 is a big trap. It catches many traders off guard, adding to the liquidity. There's a great deal of selling in this area. So this action here is an upthrust, and as we close back under this level, what happens? Look at the surge in volume. So again, this is good quality selling after a poor attempt to break in an area where we've had high volume to break. And what was support should now be resistance, and it has held. There's no question these upthrusts are tough and not particularly clean. However, when we piece together the story and understand the background conditions, upthrust 2 here is an excellent trade. It's an excellent setup. Now from here, that's $7,000 a contract. Don't forget, this is a daily time frame on oil. But what makes this an excellent setup are the background conditions. And B here is crucial. Why? Because it validates the break. We have the surge in volume, the weak close, over 50% of the spread. So when we come down here to hold, we're looking for the rally back to ice, which presents itself in a test as an upthrust. But more importantly are the background conditions. We upthrust here after a demand imbalance, which is a double negative, because if we gap up and it's a demand balance, we should have upside follow through. Yet buyers are unable to sustain the buying, and then as we trade back within this trading range, we have a wide spread, so good selling. Then we rally back to resistance with weak volume. There's no demand, followed by further selling, and again we rally here, weak buying followed by decent selling. So that whole background here is of weakness, but again B validates this level, so we're looking here for a setup. Why would we want to hold this trade for as long as possible? Well, consider this to be a trading range, which it is. Look at the length of line. We have built cores here. The selling, there is selling all here, okay, which is 1, 2, 3, 4, 5 months worth of cores. We come back, we test, beautiful. Therefore we want to hold our trade, and I think this does go down to 40, 41 which is phenomenal, which is another five or $6,000 a contract. Phenomenal. But this is a daily time frame. So the purpose or key to this chart is not to be so regimented in specificity. Upthrust comes in all shapes and sizes, not just the classic push up, come down, reverse sweep. We need to decipher the background conditions. And some upthrusts may be difficult to enter, which is okay, because even if we cannot trade the upthrust itself, we can read the act as weakness, and that may give us a license for a trade later on, as it adds to our story of weakness. For example, take this upthrust here, very difficult to trade because we don't close back under. But then by this bar, we note that this was indeed a valid upthrust. So as we rally and come back up, what's this bar here? We have a weak rally on the approach, and this is a no demand bar in an area of supply, which we will discuss today. Also, there is another entry we can enter on this reversal bar. Why? Well, if we draw in our areas of structure here, when we rally up and then reverse back down, as we take out these lows, we can let the market pull us in. Why? Well, because this bar is testing this bar for demand. Don't forget, buyers drove it up, and before markdown, they want to make sure there's no more buying. And what happens? They push it up, and again, it's slammed down. So as we break through this resistance level and under the lows, we can let the market pull us in. Now, this is an intraday trade, and this is about 100, 110, 120 ticks, $1,200 to $1,000 contract. So by the very nature of reading this upthrust and combining this action of noting the no demand rally, then we push up and then we reverse back down, odds favour that we're coming back down to test down here. Why? Because that's our nearest support level. And this is how we trade, and that was by using multiple time frames. And if we look at this upthrust over here, again we've noticed that we break, or we try to break, on much lower volume. But look at the price action. This bar here closed off the highs back under. That is selling. Clear selling as has emerged. As we rally higher, what do we notice? Shortening of the thrust in closes. So we push up, then we push up, then we come down. See, we're rounding over. This is how we amalgamate all the principles. And how do we enter on this bar? Well, we can let the market pull us in. As we close here, we may think, ooh, we want to see a break of this low. Then it confirms that this is indeed good quality selling, which it is. There's no demand here, as we can see from the volume. And then we let the market pull us in. So this is a very complex study, and these upthrusts are far from clean. Again, this was done with intention, because these are upthrusts that occur. They're not so clean. They are a little bit more ambiguous, but by reading what's occurring, we can still make very valid plays. And this upthrust here is the best trade on the chart. Along with this is a lovely no demand bar in an area of supply. And the reversal is fantastic. So we have ample opportunity. And our stops, unfortunately, due to this is the nature of the beast, they have to go above the local highs. They have to go above the bar highs. Good. To wrap this chart up, these upthrusts are difficult. And this was done with intent. Because the market, I know I repeat myself, but the market often will not produce wonderful looking upthrusts. And these two upthrusts have a different flavour to them. But when we combine our elements, when we can read the background conditions, we are able to piece the story together and take a reason for a trade. And we do this in form here of volume analysis, here of price action. Understanding a gap up that results in no upside further progress is a question mark. That is no longer a demand imbalance. So therefore, if we're disconfirming demand here, we have the confirmation of supply. Then this bar tests. We get good selling when we're back within the training range and here. Good selling all over the place. Valid break, weak rally, come back, shortening of the thrust, trying to break on lower volume than the anchor point. We add all the elements together to make a trade setup. Good. So this concludes our study on up thrusts. On to the next subsection.